What's up, guys? It is Justin back with a new video. Today we're going to be going over fair value gaps, which ones to trade, which ones not to trade. A lot of new traders that I see coming into the space and they learn fair value gaps, they end up just taking every single fair value gap they see. That is not the case. You will not find success with that. There's going to be fair value gaps that work. There's going to be some that don't work. How do we figure out which ones work, which ones don't work, which ones to trade, which ones not to trade? Today we're going to be going over that because a lot of the times you need some sort of structural context, structural bias, and if you don't have that, a lot of the times you're not going to get a fair value gap that's going to work for you. So first thing I want to jump into is understanding discount versus premium. Now, let's say we have a chart here I'm going to draw in. We have a low put in and then a big move up, a pullback, and then a move higher, right? So let's say we're pulling back here and we have two fair value gaps. We have maybe one right here, and then we have one right here as well, right? So if I was to take some sort of long entry, why would I not take this fair value gap, right? Well, the reason, now sometimes this is, some cases it will work, but most of the time I would want to see us come down to this level first if I'm going to take some sort of long entry. And the reason is if I draw out the range, I go to the high to the low of this range, this is now split up in what we call the top is premium, the bottom being discount, if we're long biased. So I would want to see us retrace to discount fair value gap and then see a move to the upside. A lot of the times when we pull back, people are going to take that initial fair value gap and then it'll get ran through, right? Because most of the time we need to retrace to discount and then bounce. And a lot of the times I use discount and premium on bigger ranges to find where the market's most likely going to retrace next. So this is number one, understanding fair value gaps. If we want to take a fair value gap at an entry, we want to make sure it's in discount of whatever the range is of that initial leg move, right? Now, the next thing we want to talk about is also understanding buy side, sell side. You know, if we just swept sell side liquidity, most of the time we want to see a bullish fair value gap, right? So for example, why would this bearish fair value gap not work, right? Why would this not work? Why do we not come up here? Why do we not come up here and then see lower? Why is that? Well, because we've already swept some form of sell side liquidity. If we look to the left here, we have this prominent low. So since we swept this sell side level, we do not want to look for a short entry, because if we sweep some sort of level, most of the time, all of these fair value gaps that are created on this side right here are going to be invalid and something we do not want to pay attention to, because now the trend is shift. We've now taken out all of these sell stops here and now want to move back to take out that next buy side level, which is at this time, it's this here move. So we can see here, we come up, you have break of structure, and then a pullback into this 5-minute fair value gap. Notice, if I go down to the 1 minute though, actually, well, 2 minute, maybe 3 minute, we'll see if we get multiple. Here we go. We get two fair value gaps here. We get one right here, and we get this one right here. Why should I not take this first fair value gap? Well, let me draw in my fib. It's not in discount. I want to see us go below discount and then look to see some sort of long entry. So if I'm looking at the 5-minute chart here, we have one 5-minute fair value gap, right? We have one 5-minute fair value gap that we end up holding and bouncing off of. But if I was to look for an entry and going down to the 1 minute, I would wait to see market come down below this 50% level and then look to take some sort of long to target that recent buy side level, right? Now, again, same reason. If I'm zoomed in here, but I have no structural context, why would I not short this fair value gap? You have to zoom out, right? Because if I'm zoomed in right here, I'm going to be like, okay, well, we swept this high. We're now pulling back. You know, why this looks like a good short. You know, we've pulled back to discount. See, you know, why would this not be a short to go down? Because you have to look and zoom out. On a bigger time frame, we've swept this sell side level. So the next draw on liquidity is going to be whatever that recent high is, especially when we have big displacement back up, right? So you always have to focus on every, different time frame. If you're too zoomed in, you're going to get a false bias. So always looking at different time frames to overall give you a better bias. That's why I am very picky with what I trade, because I want an A+ setup, something that all of the time frames I look at are going to align with whatever setup I'm looking for, right? So for this example, you can see we sweep sell side. That's why we wouldn't take any of these bearish fair value gaps. Once we sweep sell side, we're looking to take some sort of long. We are long biased, right? Now, if the market shows that it wants to go lower, then we can maybe look for a short. But this is a clear liquidity sweep to us. Notice, there is not a single candle close below this level. There's no follow through. We start showing more strength. Right when we take this level out, we're not having a move down. We wick down, move back up, wick down, move back up. And then we have this big move back up to the upside, right? So this is showing that we do not want to head lower. We've swept the low. And the only thing that we're focusing on fair value gap wise is going to be any bullish fair value gap, right? So now let's look at some more examples. Let's look more in the charts. And I'll tell you why or why not we shouldn't take some fair value gap. So let's keep looking back, right? Now, again, a lot of the people would maybe look here and say, okay, why would I not long this? Now, you could long this. Again, if I'm going to long anything here, it has to be in discount, right? So we've now reached discount. Notice we have all this fair value gap up here, fair value gap right here, but this is the fair value gap that's actually holding. It's because this is the one that's in discount, right? We wouldn't take this one. We wouldn't take this one. We're going to take whatever is in discount, right? But the reason why this doesn't work is because if this was a valid long, which look, right? We have a fair value gap here, then we should take whatever the recent high is, but we never do. Why is that? We come back and actually make a new low. Well, because we have to zoom out. If we zoom out on a bigger time frame, we can see that we've swept this 1 hour high. If we've swept this 1 hour high, then what would this be considered? This would be now considered market structure shift. So we're having a bearish model on a bigger time frame. So we have to take that into account. If we're bullish on a 5-minute chart, does that really matter? Which one do you think is going to show more strength? Whatever the overall bigger bias is. I know market wants to now go lower. We've swept buy side. We failed to reach higher. We failed to go higher here. Now, even though we swept this internal level, it doesn't matter. I know we're going to go lower because not only do we have a fair value gap, all these fair value gap and imbalances down here, but again, drawing in our fib. If I go to a bigger time frame here, like the 4 hour, I want to see this entire range. So now it's just like we're looking at the 5-minute again, but on a 4 hour. Looking at this entire range here, moved up, swept to buy side, displacement down. Where can I expect us to go? Back to discount. Draw in my fib. High to the low of the range. Boom. I know market's going to sell off to discount. So again, would I long this fair value gap or would I long this fair value gap? Obviously, the lower one because it's in discount. I go from the high, go from the low. You can see we come down, hit discount, and then immediately get bought back up. Notice we also have equal highs right here. Equal highs acting as buy side. This now becomes the draw on liquidity if we want to go higher. Equal highs always are going to get hunted, right? So again, 2 fair value gaps here. Which one is going to be valid? Whichever one's in discount, right? So using different structural biases in different time frames is what's important. Because again, like we said before, if I'm bullish on a 5-minute, right? We can say, okay, well, we swept liquidity here and then we're having big displacement and then a fair value gap. I'm going to long this. No, I would not long this because on a bigger time frame, I'm still very, very bearish until we get to discount. Then I can get long, right? Until we go to discount, I'm still going to be bearish, right? So similar thing here. A lot of the times, people do not want to wait for quality setups. They just want to, put risk on the table just to put risk on the table. A lot of the times, I won't take specific trades. Even if it looks good, I won't take it because there's something missing out of the setup that's going to make it a lower quality, right? For example, we have a high right here, never ended up getting swept, right? Never ended up getting swept, big move down. If I was focused on a fair value gap, it would be this, right? A bearish fair value gap. We can see we come up, reject it, and then come back and then sweep these equal lows down here, right? Now, I would not short this because we never ended up taking out buy side. Little things like that. If we don't take buy side, I have no interest in taking shorts because I know the draw is probably still going to be that previous high. So we end up coming down, sweeping sell side, right? Still no trades for me because we're just inside this range. I'm only going to take something if we sweep some sort of level. We come down, sweep internal sell side, and then get that displacement back up to take out all of these equal highs here, right? We have relative equal highs. This is a clear draw on liquidity. We have all of these stacked highs acting as buy side and generated liquidity, right? We come down, sweep that low, big move to the upside to sweep those highs, right? So even looking back a little bit more. Let's look at another example. Again, just looking at the charts here. We'll see. Let's go down to the 1 minute and then look for some things here as well. Want to go to real market hours and not after hours data. And ES has been having really bad action recently, so all right. We'll look at some of this stuff. So just looking at this chart right here, right? If I'm long biased, which I am, right? We know the overall draw is higher. We're in a big move to the upside, and I want to take some sort of trade, right? I can see us retracing back down. First thing I want to do is draw in whatever that recent high is. What I'm going to do is I'm going to zoom out to a 5 minute. If I can find where that was on the chart, which was right there. And I want to see us go to some sort of discount level, right? Now, zooming back in. I can see we have a lot of fair value gaps here, right? We have one right here. We have one right here. Again, this is a 3 minute time frame. If I zoom in or zoom out, there's going to be a different number of ones. So that's something that you have to figure out, right? If there's no clear setup, don't take it. It's that simple. People always ask me, how do I know which one to take? How do I know this is this? If it's not clear, don't take it because it's probably a less probable setup, right? It's not that hard. But if there was going to be a play here, you could say, okay, wait for the initial bounce, right? Wait for it, which means if we have some sort of fair value gap here, look for an internal break of structure, meaning we probably have a 5 minute fair value gap right here. I mean, we have this 1 minute. We continue to hold this. Once we do, we get internal break of structure with big displacement. Then we get a fair value gap. Notice, if there's only one fair value gap, a lot of the time, we do not need to retrace to discount. If there's one fair value gap, a lot of the time we don't need to. But I think we still do in this case. Notice, draw in the high to the low, retrace to discount, gets bought back up, targeting that buy side level, right? Any sort of fair value gap you can look at, a lot of the times you will always see the retrace to discount before going higher or going lower. Going to stay on the 1 minute, just keep looking around. Now, there will be times where you don't need to. And the times that I do take a trade with a fair value gap not in discount is when I have a clear bias and I'm confident in the trade. Whether we have equal highs, I'm confident on the draw and liquidity. Sometimes I might enter in the first fair value gap and then maybe average down, or I'll enter in half my position in the first fair value gap, then wait for another one and then average down when I actually, get the better fill and go to the discount. But a lot of the times I won't take the trade unless I get that specific entry that I want, right? So for another example, let's go back to a 5 minute here. Now, this high was never taken. Would I look to take some sort of short here yet? No, I wouldn't. We have all of these highs getting put in, right? We have a low here and a high here. Until one of these levels gets taken, I'm not going to take a short. Now, we do get something here. We get a sweep, move up, market structure shift, and this fair value gap. Again, looking at discount. I go from the high, go to the low. We retrace to discount under this level, hold this fair value gap. You would take a long in this, right? Under discount. And then notice the next draw on liquidity is going to be whatever that high is created. We come up, sweep this high. Same thing down here. If I zoom in, oh, I think I can't go that far back on the data. Here, let's take a look at NQ now. Now, took another example. Just any sort of point in time. Drawing in my lows, my highs. Actually, we did sweep this lower here. Right. So, if we're looking at this market right here, oh, also this is important too. We have clear buy side above us. If I'm looking at this chart right here, and we swept this low, right? All of this is so important. This is all context. Bigger time frame, we've swept sell side, starting to bounce back up. Notice, just continuing to draw. Would I take any short here? All of these fair value gaps, why would I not short this? We're pulling back to discount, you know, look. We've retraced to discount. Why would I not short this? Because we've already swept sell side. So what's the next draw? Well, if we look at the action, we're continuing to move up. Draw on liquidity is going to become whatever that recent high is. So I'm not looking to take any sort of short position. Now, we sell off, fake move to the downside. All of those people that are long are getting stopped out and thinking they need to go short now. Stop them out just to then go back, take out those highs. So if I'm looking to take any sort of long, I would target buy side and look for some sort of fair value gap discount. We get a sweep here. Break of structure. We put in a high. Go to the high to the low. Draw in the fair value gap and discount. We go back under 50%, hit fair value gap, then bounce to the upside, right? Liquidity sweep, market structure shift, pull back to discount. The draw on liquidity, again, not only is the draw on liquidity higher on this time frame, but if we zoom out, it's also on a bigger time frame. We swept this overall external low, starting to move up. Draw on liquidity becomes whatever that previous high is that was created. So if we're looking to take a long, we get internal market structure shift, pull back to the discounted fair value gap, right? Why would I not take this? I wouldn't take this because it's not in discount, right? You have to zoom out because if I'm too zoomed in, I'm going to look at this and be like, okay, wow, this is actually in discount. No, it's not. Zoom out, right? Bigger time frame wise, this is the move. This is the overall leg that we're looking at. Now, once we sweep this high, am I looking to take any long? No. Why would I not long this? Because buy side's now been swept. This high has now been taken. Why would I not long this fair value gap? Because buy side has been taken. I am only looking to take a short position now. Now, all I need, what do I need for a short position? Break a structure, fair value gap. We've swept external. We get a break of structure. And we get a fair value gap. Now, I do not need to see a move to discount if we only have one fair value gap. Notice, this is the only fair value gap we have. If I'm going to take a short position, it's going to be right here. Stop at the next high, targeting recent low. We have external liquidity being swept, market structure shift, displacement. Whatever that fair value gap is created from that break of structure is what it was what I'm going to short, right? Notice, this is not a discount. Now, what I would draw in is I'm going to draw in whatever that internal high is. So I'm not going to take this entire leg because there's no really low that put in. So I'm taking this to this. We still never reach discount. I'm fine with that. Because on a small time frame like the 1 minute, if I am looking for a scalping entry, I do not need to see a pullback to discount unless we have more structure. If this is the structure we're looking at, notice there's no fair value gap. This fair value gap up here has already gotten filled. So I don't really care about this. I care about whatever is created from that break of structure, right? This move to the downside is our break of structure, and it creates a fair value gap. Notice we have displacement here. This candle right here is not our break of structure candle because there's no displacement. This is when we actually break it, right? We get a big move to the downside. So this is the fair value gap we're now watching to enter some sort of short position, right? And then targeting sell side liquidity. In this case, it's that whatever that recent low is. And we sell off. So now, once we reach this low, what am I looking at? Well, if we start to show hesitation and then get a big move up, I'm not looking to short anything anymore. I'm looking to just watch and see more structure start to form, right? Notice, create equal highs. We have equal highs up here. What do equal highs do? They act as generated liquidity. We know equal highs are going to get hunted. Market starts to chop, big push down, sweeps the internal low, big move back up. What am I looking for? I'm looking for these equal highs to get hunted. Big move back up, pull back to fair value gap. Notice if I draw in the fib here, high to the low, we retrace back to discount in the fair value gap, bounce up to hunt those equal highs. Okay, now that these equal highs are hunted, am I bearish or am I long? Well, on a bigger time frame as well, we've also swept this. So I'm going to be short biased and I'm just going to wait, right? Wait for more action to start to form now. Now that this is formed, I'm just letting the market do its thing. I see we got a big push up, start to trend, and then that's where we're at right now in time. We'll continue to look back here on NQ. Get some more action. Right? Once we come up, sweep this high. Am I looking to take any long? No. I'm not looking to take any long until we reach discount of whatever this range is. So, move down. Pull back to fair value gap. This bearish. Why am I not really caring about... Why am I not caring about this? Why am I not caring about this? All of these fair value gaps here. Because we've already swept buy side. I don't want to take any sort of long. Now, it might work, but it's low probability. We're building good habits. It might work sometimes, but you have to realize if you're doing something wrong or you're doing something right. Because I don't want you to be doing something wrong, and then it works out for you, and you're like, wow, that worked. I'm going to keep doing it, because all you're going to do is build bad habits, and then you're going to get fucking hit like a semi-truck. So you need to be practicing good habits. If we sweep buy side, I'm not looking to take any sort of long unless on a bigger time frame we have a bigger structure bias, meaning buy side on a bigger time frame is still higher, which if we're looking at this time frame, we've swept this external high. I do not care. If we've swept this high, we can break out, but until I see some structural bias, I'm going to be short biased until we start seeing a bigger push up, right? Now, again, this is a lower time frame that we're looking at. So let's go to a higher. Let's go to the 5 minute and just see if we can see anything, right? Zooming in. Let's go to some more, data here. Right? We have this big move up here. 2 fair value gaps. One right here. One right here. Which one is going to be valid and the one that I want to pay attention to? Whichever is a discount. Go from the high to the low. Right? Of this. Come back to discount. Bounce from there. And then see lower. Looking at this move here. Come up, sweep equal highs. We're in a downtrend. We have a fair value gap here. Sell side liquidity here. Notice, where are we pulling back into? Go to the high to the low. Pull back to discount. Right inside that fair value gap. Aligns perfectly. And most of the time, you'll see that happen. If you get a proper setup, a lot of the times, discount will align with whatever that fair value gap entry should be. You can see, pull back to discount. Sells off to sell side. Now, if I'm looking at this low, actually, we'll do this. Come up to take this high. Am I long biased after external buy side's taken? No. So, do I care about this? A lot of people are like, why are you not scared about this fair value gap? Why are you not scared about this fair value gap? Because looking at a bigger time frame, I have no interest to long anything right now, right? If we swept this external buy side, I have no interest to long, because what's going to happen? If we take this buy side and then we get big displacement down like this, what becomes the next draw on liquidity? Whatever that next low is, which is this. So we have buy side at the high, and I do not care to long any of these fair value gaps because we've already swept buy side. I do not care, right? So if I'm looking at anything here, I'm looking at any bearish fair value gap that's going to be targeting whatever the draw on liquidity is. So this, come up, sweep internal high, bearish fair value gap because we have confidence that the draw is going to be lower on a bigger time frame. So we're overlapping models. Not only is, let's say I zoom out here, and my 15-minute fair value gap or my 15-minute bias is bearish, right? Because looking at the 15-minute, we've swept this high. I'm bearish now that we're having big displacement back down. And I want to see a pullback to whatever that low is, right? So now that sell side is swept, now what's my bias? I'm going to be more long biased. But I'm also not going to be super long biased because, again, zooming out, we have a big range here. What I'm going to do is I'm going to draw from the high to the low of this range. Look at that. Just like that previous example. Again, going to a bigger time frame as well. If I look at the 4-hour, a lot of the times, you will see us retrace to whatever discounted price is of whatever the range. We have this range here, pull back to discount, and then we go see higher. A lot of the times, you'll get that exact same example. Notice, another one here. We'll see if this aligns. Go to the high. Go to the low. Perfect. Pull back to discount. Instantly gets bought back up. Pull back discount. Instantly gets bought back up. Notice, we go under this range. So all of these fair value gaps up here, I do not care about, right? If we zoom out on a bigger time frame, like the 4-hour, we have one fair value gap here. If I'm going to take any entry inside this fair value gap, it needs to be under discount, right? And we have an SMT here, and then bounces back towards that buy side level, right? Actually, going back, another example here. We get bought up. Actually, we already showed that, actually. Another one. Buy side swept on a bigger time frame. Am I long biased here? If I'm looking at the chart right here, am I long biased? Fuck no. Buy side liquidity just got swept. What am I looking for? Looking for whatever that recent low is. What's the recent low? This right here. So what do I also know? We're going to go to discount of whatever this range is. So I look for internal break. What I do, drop down to a lower time frame. Okay, I can see buy side swept. Am I caring about looking at any of these fair value gaps to long? No, I have a bearish bias on a bigger time frame. So what am I looking for? Well, I'm looking for some sort of short model on a smaller time frame. So now that I have a bias on a bigger time frame, I'm short biased. I'm looking for some sort of short model to enter, whether it be SMT, fair value gap, break of structure, liquidity sweep, whatever it is, right? On a bigger time frame, we sell back off. Once we sweep this low now on a smaller time frame, I'm going to be more bearish. But I have to keep in mind, on a bigger time frame, we still have more room to the downside, right? We still have more room to go to discount. So I'm also going to be cautious taking any sort of long setup here, targeting the highs. Because really, there's no really room to go to the high. On a bigger time frame, we're still going to go lower. So sometimes I might take a long setup or I might take a short setup with a bullish bias on a 5-minute or a 15-minute, but on the 4-hour, it's a bearish bias. So what that means is I cannot let those contracts run. If I'm in long, let's say, there's a fair value gap right here, and I enter here, I'm not going to let it run all the way to this high because we've already swept buy side on a bigger time frame. I know we're going to most likely see lower first. So I'm not going to let contracts run. What I'm going to do is I'm going to scale most of it at 50% of the range. A lot of the times I'm going to take contracts off at the previous high. So I'll take half off here, and I'm going to let the rest go to whatever the range is. So what I do is I zoom out back to the 1-hour. We've swept this high. I'm in long. I go from the high to the low of this range, right? Because I know markets are going to retrace back to discount, right? So go to the high to the low that was created, and I know we retrace back to discount, then see lower. Notice we never close above it either. We reject this discount point, 50%, sell back off. Let's look at some more examples. Just going to keep looking. We come here, sweep this buy side level. What am I looking for? Am I long bias here? No. But am I long bias on a bigger time frame? Yes. We still have this external level. Drawing in this entire range, right? High to the low. We've retraced a discount. Drawn liquidity becomes that previous high. But can I be short bias on a smaller time frame? Absolutely. But I have to keep in mind long bias on a bigger time frame. On the 1-hour, we sweep this high. Let's zoom in. 15-minute chart. We get break of structure. What am I looking for? Pull back to discount. Notice there's no really pullback to discount here. We actually continue to sell off. Actually, there might be a pullback to discount up here. Again, if there was a setup, it would be like on a 1-minute, 2-minute in this time up here, but I can't look far that back. But again, what's the next draw on liquidity if we sweep this high? Whatever the low, the next low is. The recent low that was created is here. Mark this, mark structure, big displacement back down. We sell off to the next sell side level. Am I still bearish here? No, I'm not. I'm long bias now because we've swept sell side. Now, we still could go down more. We still have more room to go. We still have a low here. We still have a low down here. But since we've swept that previous low now, I have no interest in taking any shorts until market starts to form more structure. Right? Same thing happens here. Waiting for this buy side level. Never get swept. I don't really care. I'm just going to wait. Waiting for some sort of sell side. We create a low. Sell side gets swept. What do I think the draw is? Whatever the recent high is. Internal. Get swept. Okay. Pull back. Again, bigger time frame. We still have that bigger structural buy. So right now we're just in this trend. We have lower high, break that low, sweep it, then see liquidity, right? A lot of the times this is what we want to see. If we have a bearish trend like this and we want to take some sort of short entry, I want to wait to see a pullback to sweep some sort of level. Notice we also have some fair value gaps over here acting as resistance. Once we come up, we sweep this. What's the next draw? We have big displacement back down. Next draw is going to be whatever the next low is. Sell side liquidity right here. Sweep the low. Again, smaller time frame. Let me see if I can zoom in. I don't know if I can look at the 5 minute from that long ago. There we go. Notice 2 fair value gaps here. Actually, well, there's technically, can I zoom in more? Maybe 3 minute, 2 minute? Again, I'd have to see lower time frame to get a better judgment. Did I miss it? No, I think it's still far back. There we go. Wait, that's not it, is it? Is this it? I think this is it. So buy side swept. Market structure shift here. Big displacement. Where am I looking to short, right? We have, notice, buy side level swept. Displacement back to the downside. Where am I looking to short? Somewhere in discount. Go from the recent high to the low. Also, if I draw in from the high and the low, retrace to discount. We have a fair value gap right here. This is where I short. Where do I put my stop? Either the high, depending on your risk, or the recent wick highs. I put a short in discount, stop at the high. What's my target? Well, my first target is taking off some contract at whatever the recent low was. We have a recent low here. I'm taking at least a quarter off here. What's my next target? Sell side liquidity. Also, any unfilled imbalances. So I'd take off maybe one right here, take off maybe one right here. But most of the time, I want to see it go to whatever that sell side level is. And then there you go. Sell side levels end up sweeping, right? So fair value gaps, you need context. I want to see a break of structure, liquidity sweep, then that fair value gap and discount. A lot of the times, if we're looking at the chart right here with no structural context, a lot of people are going to end up like longing this, right? Why do I not care to long this, even though it's in discount, right? If I'm looking at this trade and I have a fair value gap right here, look, if I draw in my fib from the high to the low, it's in discount. Why would I not long this? Overall bias is still bearish. We've swept that external high. We want to see lower. Let's look at another example. I think we've already went over that one. Again, bigger time frame wise right here, though. This is a bigger model. Big 15-minute high swept. What would be my break of structure? Break of structure. Big displacement. What am I looking for? Pull back to discount. High to the low. We get that tapped in right here. Big fair value gap. Short and discount. Stop at the high. Your first price target would start scaling out along the way, right? And then what's the draw? Sell side. This fake out move never ends up getting stopped out at the high. Big move back down. Again, if I'm bearish, what am I looking for? Retrace to discount. This shows me that we're still bearish. Have another retrace back to discount. Fair value gap. Rejects. Sees lower. What's the draw on liquidity? Whatever that previous low is. Sell side then swept here. Am I looking to long anything here? No, but I'm still bearish because on a bigger time frame, we've swept that external level, big external level. So what's the overall draw on a bigger time frame? Well, these lows. But notice ES ends up sweeping these lows. So we're actually forming an SMT here because if we're looking at NQ, that means ES swept that sell side level. So a lot of times, one or the other will sweep it, but the other one doesn't. That's why we form SMTs. And that's why SMTs are so important. Let's look at some more examples. Go back to a 5 minute. Let's play a game. I'm just going to go randomly. I'm going to tell, would you long this or would you short this? Actually, let's do this. 15 minute. We'll do this. Replay. Let's go here. Let's take a good look at the chart here. What am I going to draw in? Notice all of these highs here. What does this become? What do all of these highs here become? All of this becomes low resistance liquidity, which means if any of these get taken, we're going to most likely take all of them. So the only high I care about here is that external high, that being my buy side level. Looking at the chart here, what am I? Most of the time, I'm going to be pretty bullish because I want to see that high being taken. We've had a big move back up or big move down, big move back up. So I'm going to zoom into this range now. Okay. What is the high and low of this range? If I have to wake up today and I'm going to be bearish or bullish, what am I going to be? Well, draw on my buy side, draw in this range, and we've reached discount. Notice all of these fair value gaps and imbalances here. We're discount of this entire range here. I'm bullish. I still think the draw is higher now. So what am I looking for? Internal sweep, internal break of structure, targeting buy side, and then external buy side. So if I zoom back out to a 30-minute, we can see we're still holding this 30-minute fair value gap. We've retraced to discount of this range, holding that fair value gap. Look how strong. 1, 2, 3, 4, 5, 6. We cannot break this fair value gap. What is the draw on liquidity? Just by looking at this, the draw on liquidity to me, now that we've retraced a discount, draws higher on a bigger time frame. Smaller time frame, draws is going to be this recent high now. So what would I look for an actual trade? Look for some sort of internal sweep, break of structure. Internal sweep being if we come down, maybe sweep a low and then come back, bounce up, look for some sort of internal break. I haven't seen anything yet. We'll see if we get anything. Big move up. Some kind of break here. No really A+ setup. Maybe could see us retrace back to here and then go to buy side. But right now, I just have confidence in the draw. If I was to take a long, I wouldn't really take anything yet. Draws hit. Now what? Now I'm bearish on a smaller time frame. On this time frame, I'm bearish. But again, zooming out. Draw on liquidity is still higher. All of these highs become low resistance liquidity. I have to keep that in mind. I have to keep that in mind. So if I'm looking to take a short here, I'm not going to let it run all the way down here. I would have to do whatever the recent low was. Let's see what happens. A lot of the times, let's go to the 5-minute. Actually, zoom back out maybe. Break of structure. Fair value gap. Pull back to discount. Now, why is this a lower probable setup? Because draw on a bigger time frame is higher, right? Now, could this still work out? Yeah. But it's going to be lower probable. We'll see if it works out, though. This is whatever our setup would be. Stop would be at the high, or stop would be, I wouldn't even really risk that much. First price target, again, would be those equal lows that we created. Second price target would be any unfilled imbalances. You could scale at any sort of low, right? It depends on your risk parameter. I would probably scale out here, scale out some here, and then use the runner at whatever the recent low was. But again, I know the draw on liquidity is higher. So we'll see what happens. End up getting stopped. Draw on liquidity is higher. Lower probable setup. You have to keep that in mind. Why would I? That's exactly why I wouldn't take the setup. If every sort of time frame has to align if you want to only trade good setups. If you really want to be profitable, you have to have the discipline to only trade good setups. And if you don't recognize that the overall draw on liquidity is higher, again, all of this becomes lower resistance liquidity run, right? All of these highs are super close. So if we take one, we're going to take all of them. So I have to notice that. We end up coming up. Draw on liquidity is still higher, right? If I was to take a long now, what would I look for? Retrace the discount of whatever this range is. High to the low. Would want to see discount. Discount never met. There we go. Draw taken. What happens after? Instant move back down. Now what would I look for? There we go. Internal break. Zooming back out to a bigger time frame now because this is now a liquidity sweep on a bigger time frame, right? Now, what would this be? This would be now be market structure shift on a bigger time frame, right? What would I look for? Retrace back to discount. Zoom into the 15-minute. We have two fair value gaps here. This one and this one. What do I care about? Whichever one's in discount. High, low. Don't care about this. This is what I want to watch. Watch how market comes up. Taps into that fair value gap perfectly. What do we expect to see happen now? Zooming back out to the 1 hour. External swept. Market structure shift. Pull back to discounted fair value gap. What would I want to see now? I'd want to see lower. Continue to hold it. Notice as well, no internal liquidity swept though. And we come back and see that recent low being swept. So again, lining everything. So we might get chop here, but again, on a bigger time frame, if I'm going into today, if I'm going in it, let's say this is right today. If I'm going in it today, I'm going to be short biased. What would I want to see? Well, look at all of these highs here. This might become low resistance liquidity run, meaning if we take one, we're just going to skyrocket and take all of them. So if I'm bearish on an overall bigger time frame, I'd want to see a push up to sweep this high and then a move back down. Okay, come up, sweep the high, bearish on a bigger time frame. I would have to wait. Again, market hasn't told me it wants to go lower yet. Market still has not told me it wants to go lower yet. We sweep internal. What am I looking for? Market structure shift on a bigger time frame. Now we get displacement. Now I could say, okay, we could possibly go lower. But what do I know we're probably going to go to? Probably going to go to discount of this fair value gap. Or of this entire range, right? We haven't reached discount yet. So I know we still have lower to go. Again, this is a 1 hour. So most of the time, I'm zoomed in at this point. I'm zooming in on the 15-minute, 5-minute, whatever it is, right? So draw on that range. I know we could probably go to discount. Discounts never met. Maybe. We'll see. Never met. Internal sell side swept. But notice we've now reached a discount on a bigger time frame. High to the low. We've now touched discount. So am I bearish or bullish? Either way. Could go either way. On a bigger time frame, we've swept external buy side, but we've had big move to the upside. So maybe we could see higher. And we've reached now discount of this entire range. So we definitely could possibly see higher now. What would I look for? What's going to show me that we want to see higher? Break of structure. So this would be internal. This would now be break of structure. I'd want to see this with big displacement if we want to go higher. Until then, there we go. We had big move, market structure shift, bigger time frame. We've retraced back to discount. If I'm looking at a daily, I zoom out. We're holding a daily fair value gap. Zooming back down. Drawing my fib. We've reached discount, right? I knew we were going to retrace a discount. Now that we've reached discount, I then zoom in. Look for internal break of structure. We can see internal sweep here. Internal break of structure here. Again, big displacement. I don't want to see a little poke above and then move back down. I want to see this big move through that level. Now what? I want to see a pullback to discount. Drawing the high to low. Again, whatever that high gets put in. We'll see if this is the high that gets put in. Again, want to see us retrace a discount. After hour session, again, going to be choppy, slow action. Put in another high. Still would want to see us move to discount. There we go. We've now moved to discount. So now what do I do? Well, I notice we have a fair value gap right here. So looking at this chart, am I long or short biased? I'm going to be more long biased than I am short biased. But I still could maybe see this. So what would I look for? Well, bigger time frame wise, we've retraced the discount, big market structure shift, slowly retracing back into this 15-minute fair value gap. We've now retraced to discount, right? Draw on liquidity. If we end up getting a bounce here, internal would become whatever the previous high is. So now what do I look for? I zoom in. Zoom into the 5-minute. Want to see internal break of structure. Again, I'm still haven't taken a play yet. It's not like I just jump in along right when this fair value gap is. That's not it. I need every sort of thing to align. So now I need to perfect my entry by going down, looking for some sort of 15-minute. Notice, we continue to sell off. No entry. I'd need some sort of break of structure. I would look for this high being swept. It never got broken, so there's no entry for me. Still wouldn't take any trade yet. Now, we come down. Don't sweep this low. Big displacement back up. Since we came down so close to this low, doesn't give me confidence enough to take a long here. I would still wait. Still would wait. Buy side's now swept. We get market structure shift. Zooming in. Do we pull back to discount? Now, you could mark this in two of which ways. You could do this way, which we never actually do go to discount. Or you could go from whatever the high is. And a lot of the times I like to do, if there's an order block, that's the high I'll put in. So we can see we have an order block here, right? Move down, move up. I'm going to do whatever that high is created. High, low, pull back to discount. continue to sell off, right? Again, after taking external buy side, displacement back down, market structure shift, pull back to fair value gap, sells off. Would I be looking to take any long here? No. Do I want to draw this in because we can bounce? Yes. This is still important. We could still bounce off this, but am I looking to take anything? Not unless I don't get any smaller time frame structure, right? Because on a 15-minute, we're still technically bearish. Another thing I want to draw in, have we reached discount of the range? No, we haven't reached discount of the range, so I still think we have more lower to go. So, zooming back in. Oh, I can't go down to the 1 minute, can I? Oh, I think I fucked it up. Gotta go back to the 5 minute. Was this where I was? I'm not sure, to be honest. I think this is where I was. Yeah. So, this fair value gap's important. We've now retraced a discount, right? This is where we put in discount. Now what I would look for. Well, here, this is a news move, so we don't really care about that. Again, let's just keep looking for more examples. Come down here. Big move back up. Do we retrace the discount? Nope. Actually, yeah, we do. This is your long here. Notice all these fair value gaps here. Boom, boom, boom. Which one do you choose to take a long in? Whichever one's in discount, right? Touch it perfectly. Pull back, touched it perfectly. Automatic bounce up to the upside. External. Okay, we already talked about this one. Let's go to like gold or something. Something random. Literally look at any chart. We'll do... Actually, we'll do... Let's go to gold futures. 15 minute. Actually, let's go to... Wait, what's the fucking... There we go. Looking at the same thing, right? What fair value gaps do we take? Well, looking at this point in time, what's the draw on liquidity? This high. Look how close we are to it. If I'm going to take any sort of long position here, I would have to see a discount first. I'd have to see us come down to here first and then get a bounce and then look to target buy side. I don't want to enter up here. The risk is skewed. There's no reason for me to enter up here because my risk is awful. Keep looking. We sweep buy side. Once we sweep this high, am I looking to buy? No, I'm looking to short towards whatever that recent low is, right? Let me zoom in. Let's see if we get any sort of internal. 5 minute. Break a structure up here on a lower time frame. Next draw becomes this recent low. Gets met. Right here. I'm bullish here. Big move up. We have all of these highs being swept. Big displacement. What am I looking for? Retrace to discount. High to the low. Pull back to discount. Then bounce towards the high. Go back to the 15 minute. Let's keep looking. What is all of these lows? When you look at all of this right here, what is this? What is this? What does this become? All of these lows here. All of this becomes low resistance liquidity, which means if we come back down to this area, right? We have a big move up. If we come back down, all of this is going to be swept. All of this is going to be swept, which means every single low here is going to be broken in one move, right? So what do? I draw on whatever that external low is because that's going to be the real hunt. Let's see what happened. When we came down, did we wipe all of them or did we just sweep one? Looking over to the right, we sweep all of these lows because all of this becomes low resistance liquidity. A lot of the time, you can draw it if you just draw a little trend line like this. All of this becomes low resistance liquidity, which means if we take one, we're going to take all. That's why I don't care. If we take this, I'm not looking along because all of these lows are super close. So I need to see external low being swept first. Continuing to look. Discount of this range. Move to discount. Displacement back up. Buy side met here. What am I looking at now? Possibly see lower. Notice we never get a move back inside this range. We move back just a little bit, right? Not a lot. And then we bounce back up. What is the draw? If we can't see lower, draw is going to be whatever that previous high is. Notice. Big move up. Where do we retrace back to before going higher? Retrace back to discount, then go towards whatever that draw is. $15-minute swept. High swept. Big displacement back down. What's the draw on liquidity? Whatever the low is. Sell side. Swept here. Am I looking to long anything now? Or am I looking to short anything now? I'm looking to see some sort of internal break. So, once we sweep this, am I looking to long this fair value gap here? No. Why would I not long this? Because buy side's already been swept. Once we come down, sweep sell side. Am I looking to short or long? I'm looking to most likely long, but unless I don't get a long setup, I'm going to be patient. Notice, we just continue to slowly chop off, but there's no setup here for us. Just continuing to chop, continuing to sell off, continuing to sell off. What would I want to see? Internal sweep, big displacement. Notice, internal sweep, big displacement. Now what? Well, on a bigger time frame, this is break of structure. Let's zoom out. This is now break of structure on a bigger time frame. So now what? What can I expect? Pull back to discount. 4-hour fair value gap here. Pull back to discount. Under discount. Never sweep this low. Gets bought right back up to buy side. What can I expect here now? Discount of whatever this range is, right? Zooming way out now. Daily time frame. What's the draw on liquidity? Well, we haven't swept this. We're actually forming equal highs. If I want to take a long, or if I want to be more long bias, what would I need to see? Discount of this range first. Notice, we've reached discount here. We have this past fair value gap here as well, showing support. Am I long biased or am I short biased? Most likely going to be long biased here. Long biased until we reach this buy side level. Now, if we reach this buy side level, I'm going to be short biased on a smaller time frame, because on a bigger time frame, we've reached discount, we're holding this fair value gap, and we have equal highs, being the draw on liquidity is higher, right? But on a smaller time frame, once we sweep this 15-minute, we could now see lower, potentially taking out whatever that recent low is, which is this. So we could see one of two things. Either we get a big move up, going towards whatever that buy side level is, but once we sweep this 1 hour high, I would be more short biased in a smaller time frame, looking to see back lower, right? So I hope this video sort of helped you guys. Again, a lot of this video is just me diving into the charts, just looking at a bunch of random stuff and telling you, what you need to be focusing on, what you shouldn't be focusing on. A lot of the fair value gaps that you need to focus on need to have some sort of context with premium and discount. If there isn't anything, you need to not take it. If there's no easy bias for you to understand, then don't trade. It's that simple. The more experience you gain, the more confident you'll get with playing fair value gaps and having understanding context with liquidity and stuff like that. But if it's not clear, then don't trade it and just watch, right? Gain experience just watching it. So hope this video helped you guys in any way. If you like this content, make sure to subscribe, leave a like, and I'll see you in the next one. Peace.